Welcome to Teague Talks. I'm still on a high from the Hunter Conference 2 weeks ago. And I'm going through picking out my favorite conversations and my favorite panels and topics. And I really like this one. Yes, a little biased because, again, I was a part of it. I was the moderator. But I just feel like it's me and my friends talking about their day jobs. Great insights, really smart people. I enjoyed it. I hope you guys will too. If you didn't see it the first time, here it is. Teague Talks, Main Street.
Thank you guys. Thanks everybody for, getting up early this morning and coming and trying to learn. This is a packed day at the conference today. There's a lot going on, so I hope everybody gets a lot of sessions in and gets to learn. So the last guys are some of the smartest minds in the room, right? I'm biased to this current panel for obvious reasons, but the last guys, you're hearing from Blackstone and Noble and GenCom. I mean, Karim Alibi is doing most of the deals in the business. So those guys are really talking really smart stuff. So I hope you got some stuff out of that. And somewhere in there, Christian's on that panel too, who only mostly wants to talk about Reno. But these guys are Main Street. This is what we're doing. Hopefully this is most people in the room. So these are the conversations I love. These are my friends. And we want to talk about Main Street topics, right? They can talk about global geopolitical conversations. We're going to talk about day to day. So hopefully you know these guys, but I'll introduce them. Alpesh Patel from Kana, Knoxville, Tennessee. Mitch Patel, the infamous Mitch Patel, Chattanooga, Tennessee. Bo, thank you for coming. Bo's with Corey. Bo's from California all the way, Orange County, Tarsadia, T2, now Corey, Hospitality, and Azim from Ocala, Florida. So thank you. I agree. That is a woo. We're going to talk about a bunch of stuff. I'm rambling, but hopefully you want to hear about it. But development, acquisitions, management, PIPs, renovations, dealing with the brands, all those kinds of topics. And I want to know what you guys are seeing. But I'm going to start with a contrast to that last panel. So you're next to me, so you're in the hot seat, my friend. So what do you see in the difference between Wall Street, the way they're viewing the world today, and the way Main Street is viewing the world today?
Yes. Well, the main thing is we're dealing with a lot of the same things that they talked about. Low RevPAR growth. I mean, depends on the market, and so it's really, we talked a little bit about it in the back. There's a lot of differences in the market. Like if you're in a government market right now, I mean, things are not good. We think that there's other demand out there, but if you're in Huntsville, Alabama, you're struggling right now. If you're in a kind of a mid-tier leisure market, it's also challenging right now. If you happen to be where a big data center is getting built, times are great. So there's a lot of variation, and we're all dealing with a lot of the same things. Heightened cost, pressure on margins, insurance cost, labor cost are going up, and can't wait to dive in a little bit more on how we work with our brand partners on renovations and PIPs. So that's some of the things that are top of our mind right now.
All right, Mitch, and I'm going to tee you up because we just did this on the podcast, but we talked about how Wall Street is kind of negative. If you listen to Star today, some of these guys were a little more positive. Nacetta was actually very positive yesterday, who I believe he's a positive human, but the STR is predicting, flat RevPAR growth and margin pressure, and they're relatively speaking very negative. But you and I would argue this whole panel, we're hoteliers in it all day, and we're not. I don't know if we're just positive human beings, but we've already predicted, no, we're going to do really well, 3%, 4%, 5% RevPAR growth this year, just because. I put words in your mouth. I'm sorry. Go. How do you see the world?
Yeah, look, you just heard from the panel before us about their philosophies on how they run their businesses, and that's why these two panels are just fantastic back to back. Macroeconomics are important, there's no question about it, but this is a microeconomic business as well. It's a corner street business, as Alpesh even mentioned a little bit earlier. So the brand that you partner with, the location within the market is so important. How well is your property maintained? And then very, very important, this is a service business, a people business that's layered on top of the real estate. So my friends that are, Wall Street, they often tend to forget that this is a people business. And so what's your culture look like in your organization? Your associate engagement, your guest satisfaction. We live in a transparent society more than ever. And I think we'll probably touch on AI later on in our panel, and AI is increased that visibility more than ever. And so if you're going onto Marriott.com or Hilton.com and you see, a hotel have a 4.8 rating and another hotel have a 4.0 rating, that could be the difference in success or mediocrity. And so there's just so many variables, but you know what I love about this industry? There are so many variables. And so there's so many levers that you could pull, unlike office and retail and multifamily or industrial. There's so many levers that we could pull. And so, again, one last thing I want to mention about Main Street and Wall Street. When Wall Street zigs, oftentimes Main Street will zag, right? In 2010, I remember we just coming out of this, the Great Recession, right? And there were so many people that were just putting their heads in the sand. They said, I want to completely get out of this business, forget even growth. They want to get out. Well, we leaned in. We had about 8, 9 hotels at this time, and we developed 14 hotels from 2011 to 14. And those are some of our best hotels in our portfolio today, because the last time I checked, basis is important.
Amen. Bo?
The only thing I'll add to that is Mitch mentioned, it's a people business, and it's interesting being on this side of this couch now, following the previous group. I can't tell you how many times I've had owners' meetings when they don't care about GSS. And Mitch just shared GSS matters. That's the difference between the 4.0 rating and the 4.6 rating. And in our business, that gets lost very quickly because you think the customer's just going to come. The customer is becoming smarter every day.
Azim, I see you nodding. You got a lot to say. I can feel it. Let's hear it.
I want to qualify my response by acknowledging the risk in our business is real. It's very real, right? And Wall Street's job, at least in my eyes, is to assess that risk. But ultimately, it's about the entrepreneurial spirit. It's about the conviction you have in the deal. And if there was no risk, there'd be no reward. So you got to take the risk. The risk has to be calculated, but you got to take your swings and then bet on yourself as an entrepreneur to figure it out. Bet on your culture, bet on your team, your ops team, but that entrepreneurial spirit that Main Street has, the deal conviction, has to continue to prevail because we bet on ourselves. We, like Mitch, did a lot of deals post-Great Recession. And some of those deals were underwater and head-scratching, and my friends who were practicing law at the time told me how much they were making and no personal guarantees. But we survived because we bet on us as entrepreneurs and have that conviction.
I think you did more than survive. I mean, I'm making it up. You had 5 hotels, now you have 105 hotels.
I have a lot of leverage too, and right. I'm an entrepreneur at heart. So.
Mitch, you want to add anything about culture? I know you're a big culture guy.
Yeah, we could talk about, that could be a whole different panel. But look, Howard Schultz says culture will trump any business strategy any day. And so we believe in that wholeheartedly. And, it's to us, it's pretty simple. It's a people business, people serving people business. So first and foremost, every single day, we take care of our people. And it has to start with me. And of course, we've got a great team, great leaders. And we have a lot of data as well. And so let's talk a little bit about data. With our entire portfolio, we're looking at, okay, which hotels are performing the best, right? And of course, we could talk about brand and market and all those things all day long. But at the end of the day, what we also noticed was that the hotels that were performing the best also had the most amazing leader, general manager at that property, right? Great leaders, right, can inspire their teams to perform better. And so that has to be earned, not given, right? So a great leader should build that admiration and respect from their team. And if you're putting deposits in that emotional register, it's amazing what kind of withdrawals that you could get back from your team. And then when you take care of your team and they're highly engaged and happy and motivated, especially in this world that we talked about just a minute ago, that this transparent world that we live in, where every single guest feedback is going to be announced to pretty much the world, right? So it's just so critical that you get that piece right, taking care of your team, and that's, at the end of the day, what our culture is about.
And I'd like to piggyback on that. One of the things I love about this industry so much is that we like to let our leaders know, don't hire our general managers based on their experience necessarily. That shouldn't be the number one factor. Let's look at more than that. And so just an example that I would like to give is that one of our flagship hotels is an urban Embassy Suites, very high volume hotel. The general manager, and it's ranking top 5% in the brand in terms of guest satisfaction scores, very profitable. The general manager was our breakfast hostess at a small roadside Hampton Inn about 5 years ago. So that's just exemplifies the beauty of this industry.
Yeah,
I'd piggyback off of that. This year we hired 4 first-time general managers with similar stories, right? So we are an industry where we always go back to what we know and hire someone with experience. And these 4 leaders are just unbelievable because they can connect with every, we call our employees curators at Quarry Hospitality. So they can connect with them at a different level because they've walked in those shoes more recently versus 10 years ago, right? We're an industry that always shares, 10 years ago we did it that way. Well, those days are gone. World's changing quick. And to follow up to Mitch, you could have a whole nother session on culture. How many people ask their employees, curators, are you happy? So we took a page out of a country by the name of Bhutan. Whoever's been there, I highly recommend it. They measure gross national happiness. So this year we've charged our HR leader, how do we measure happiness with our curator pool? So we're going to figure it out because ultimately, as you know, it's the age-old saying, happy guest, right? We're going to be at happy curator, happy guest.
I would say yes, 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 and add to that we also try to educate our team and work really hard at it to develop the entrepreneurial business savvy and understanding, meaning understanding a P&L. Why does the GOP matter to them other than me trying to get rich? How does it influence their long-term growth, which right now I'm not, but anyway, that's another story. But how does it influence them and their long-term growth? So that they understand the business more than just a profit motive. And there's a 10% variance in your food costs or you missed on your labor forecast and what happened. It's a tough business. And to run a hotel, with the law degree, I have failed in QA inspections as a general manager. And I had a law degree, I practiced law for a while, and I failed QA inspections. It's a tough business. And they have to understand why you're pushing at times as an ownership group the way you are.
So I get that at the general manager level, but I'm going to push back. Is that all the way down as the front desk clerk? Why do they care about the P&L?
It impacts their long-term growth and career opportunities in a big way, even housekeepers. And we try to really make an effort to educate them on what is GOP, what is EBITDA, and why it matters to them, even at the housekeeping level.
And I think adding to that, getting creative with incentive programs that touch on that. Look, as human beings, we want to learn and add value and make impact. And I think involving them, to your point, and having them understand that, it's amazing the results that you get when they're getting rewarded with really creative programs that you should lean on and learn from folks up here as well as, at the conference. We just got to get creative.
Teague, while we're on this topic, one more item I want to mention is purpose, right? What gets you up in the morning? Cleaning 14 rooms? That's a tough task. And so I love this story where John F. Kennedy was visiting NASA, and he saw a man with a broom, and he asked this man, what do you do here? He said, Mr. President, I'm helping put a man on the moon. And so purpose is powerful. And I think that this, they call FIFA is coming, right, to United States and, of course, Canada and Mexico as well. And they call it the beautiful game. Well, this is a beautiful business. I mean, like Alpesh said, where can you have opportunities where a housekeeper can become executive housekeeper and an assistant manager and general manager in a very short time frame? We just had our leadership conference, and the GM of the year was a housekeeper in 2017 that joined our company, and she's the GM of the year. And so there's a lot more to this than just the macroeconomics of what's going on. And I know so many friends in the audience here are having tremendous success because they're following this formula of, first and foremost, taking care of their team.
I love this conversation. This is fantastic. We could do this all day, but I'm going to make us pivot a little bit. Bo, I'm going to pick on you. You've been California. You guys have changed, from my perspective, the core of the company, right? You were California, you were prolific developers for 50 years or something, and now you're no longer doing that.
Yeah, I mean, look, as in this industry, these gentlemen are great examples of that. Like, we stay true to markets that we know really well, and California was that market, right? And no secret here, not only are Californians moving to other states in terms of residents, but businesses also following. And the hospitality industry is a great example of that. Labor pressure in California is at the highest ever, and T2 at that point realized, like, hey, you can stay comfortable and know the market you're in, or you could be undisciplined, which is a prickly word for all of us, and explore and become more diversified kind of across regions. So taking that step and buying hotels in the Midwest as well as on the East and the South, with help from gentlemen like Mitch over here, right, of convincing us, like, step outside of your comfort zone, was a great business strategy that wasn't probably something we would have done 10, 15 years ago. You kind of stay in your market and just become experts in that area. But the economy has changed. Business in California has become harder. And I was sharing with these gentlemen, if there's, hopefully the guys before us aren't in this room and own a bunch of assets over there. So, but I today would not buy a hotel in Los Angeles for obvious reasons, right? It's tough. It's a tough labor market, and don't know if that's going to turn.
So I'm going to keep drilling down, if I can put your business out there. So you guys had a gigantic $500 million 1031 exchange last year. Pressure, whatever you want to say, but you guys were able to buy things, so you were one of the more prolific buyers last year in spending that.
Yeah, so, exchange pressure is never easy, and obviously a lot of pressure in that. But the strategy was to deploy capital in the hospitality industry again, even though we looked at other, data and multifamily, just hospitality was where it made sense. And diversifying to the south and to the east, obviously a lot of plane flights and underwriting and performers and et cetera. But there was opportunity out there, right? So selling something in California at let's call it a 6-ish cap and buying things at average 8 is what made sense. And we were able to pull it off with help from our broker friends, et cetera.
I think that's, I'm going to repeat that though, because Tarsadia, they could do anything they want. They really can. I mean, they're in pharmaceuticals and bioscience. not just industrial real estate, right? Industrial, multifamily, et cetera, and they're staying in the hospitality space. When you're hearing all this negative, sorry, I'm going to be negative from the last panel, all this negative in the industry, but these guys are like, no, this is what we do. This is the best return on capital.
Yep.
And then to echo, you went to markets like Greenville, South Carolina, and Jacksonville, Florida, and Texas and the like. DC.
St. Louis, kind of markets we would never have thought we would be in.
Azim?
Yeah, there's one point I wanted to go back to in terms of culture and team members. And, you know, we have frontline team members who have, and above, who have actual K1 ownership in our hotels. They understand when I get a check, they get a check. They begin to understand how depreciation affects them. They understand investor return because they're living it. They have skin in that game. They ask when K1s are going out, and they understand that business really well. I think to underscore what Bo was saying is you have to be agile in your model, right? What got us here isn't going to get us there, and you got to pivot and you got to shift. Part of that is you're going to get bruised and banged up sometimes, and then you learn from that and you fail forward. But you keep playing in the model. We're just hospitality people. All I do is hotels. And over time, the business has paid us off well. But some time period, the runways are longer. I think right now the runway might be a little bit longer.
Azim, you mentioned K1. So will you talk about your capital stack or your capital partners? It's a little different. I mean, you guys are it's all mostly friends and family money. Yours is a little different. How are you keeping them happy and motivated in this world?
Being very engaged with them right now. It's tough. The deals we did starting from summer of 22 to date, not all of those deals have returned on cash.
Right.
So being very, very, very engaged with them and front-facing with them. I'm in agreement on, of course, we send out monthly financials, all of that stuff. But ultimately, the buck stops with me. They trusted me and our team on that investment. And for that, I think you have to have a lot of face-to-face time. And if it's not face-to-face time, then calls. But I think the accountability there, if you're struggling with the financial results, the accountability there in terms of communication needs to be there in a big way.
Mitch, I know you and Alpesh don't have this problem. Your investors trust you blindly. You've made them tons of money. They don't argue with you. But assuming they did, where are you guiding them? Where are you leading them next? What are you leaning into?
Look, because of our discipline model that we've had for a long time now, yes, we've had tremendous success, and our partners, our investors, I call them partners, have been very happy. I do want to just touch on the main difference between Wall Street and Main Street is also we have patient capital. Some partners may be a little bit more impatient, but generally we have patient capital. And so we're looking at these deals very differently, right? We're not going in and then have pressure to get out at a certain time period with some document that says it. And then with a huge pref-promote structure, you're incentivized to sometimes make decisions that might not be the best for the partnership. And so our outlook, and Teague, you and I have talked about this, if we did a hotel in New York City or pick a market 30 years ago, you know, as long as we didn't do anything crazy and refinance, you know, just a crazy amount, then I think we'd be okay. Because real estate tends to appreciate over time. But the key is, do you want to be in a market where it has the potential to appreciate over a 20, 25-year period, or in a small market where it might not be worth the dirt that it sits on. So let's just break it down for a second with just stocks, right? So right now, of course, there's a lot of noise in the marketplace, and you may be concerned about investing in the current environment. But we're developers. So we like to develop into the noise, right? And then look at what it's going to look like 2-3 years from now when we open, and then 5 or 7 years or 10 years from then, what is that investment going to look like, right? So if you're looking at buying stocks, this is a time to be buying some blue chip stocks, right? It might be still valued significantly more than what it was 8-10 years ago, but if you buy it in Apple or Amazon and hold on to it for 10-15 years, I think you're going to be okay. So if you're a day trader, then that's a little bit more challenging, right? And timing real estate can be very difficult. There's people that have made tremendous money timing real estate. But we believe in the long-term sustainability of this industry. And that's the first question that you have to ask yourself. Do you believe in the long-term sustainability of this industry? And if the answer is yes, then go to step 2, right? And that's what our belief is, and that's why we're still building. And we could talk about the why here in a second, but we believe that 5 or 10 years from now, that our investment is going to be well protected.
And to piggyback on that, when we talk about capital stack and kind of, there's so many different ways that you can invest in this industry. The way we're set up, similar to Mitch, it's a lot of friends and family capital. And so our typical, investor is someone that maybe has 1 or 2 of their own hotels. They don't have the infrastructure to expand further, so they have some savings and they want to write us a check for $200,000, and we form a single asset LLC. So with that comes, I call it the burden and the benefit. So as Mitch says, the benefit is that it's super patient capital, very little reporting requirements, but the burden on that, the reason why you have to be super disciplined is you see these people in your community. I mean, so if something goes wrong, it's a personal connection, a personal relationship there that you don't want to compromise. And so we stay super disciplined when it comes to this sort of capital.
All right, but now I'm going to go ahead.
I was going to say, I am a investor with Alpesh, and you've done a fantastic job, by the way, in running your business. But I think you hit it on the nail with the relationships. I think that drives us to perform even better. Because these are family members, your uncle, right? Their life savings oftentimes. They're trusting you and in a project. And so I say this all the time. I am absolutely more concerned about my partner's capital than my own. And that's why we've had a tremendous track record of performance and not having to have a capital call as well, because we are so scared to be reaching out to our family members to say that this is what you have to do. And so, and that trust
There's
and confidence.
Human connection and an ego there. And
absolutely.
yeah. I'm gonna compliment Alpesh, but a shameless plug, not really trying to do that, for the podcast. We just sat down and had a fantastic conversation. And if you've listened to him or if you haven't, I'm gonna repeat some of the stuff. But the reason I love doing the podcast is we get to sit down. You were very open, you were very real, sharing your experiences. And if I may repeat some of those, so go listen. That's the reason we do it, is for everybody. I just love them. I'm gonna continue doing them until my team throws me out. But you said you were very, but talk about the Capitol. We just walked the Embassy Tempo in Pigeon Forge, Tennessee. It is now, you go from a $10 million hotel to now an $80 million hotel. And at the risk of putting your information out there, $300,000 a key, and you raised it all cash. Your embassy in downtown Knoxville, I believe, was $40 million, all cash. And you told your investors, don't invest in this deal. We're not going to make any money.
Correct.
And you get $80 million all cash. That's trust. I'm answering my own question. But that's the trust they've put in you guys, and you made them tons of money before, correct? All right, now I'm piggybacking, now I'm pivoting. But that's amazing to me, everybody. I'm piggybacking. When we started, and I'm going on timing, sometimes timing's better lucky than good, but you said we could build Hampton Inns for $6 million, and they were immediately worth 10. And today you can't do that. So Mitch, I'm gonna make you answer. So what are we doing?
Look, I'm not going to tell you that development is easy. By the way, if you looked at this panel, none of us really, except Teague, we don't have hair. So
It's a prerequisite, Mick.
I know.
What
In what
that
room do I have most of the hair?
clearly tells you that this is not easy, what we do. And I noticed the Wall Street guys all had a full.
Go ahead. Good-looking guys.
Amazing head of hair.
That's why they got the job.
So look, we've developed over 60 plus hotels, and it is probably the most challenging time right now to be developing hotels, and this is what we do, right? Every company creates value differently, and our company historically, and even Alpesh's company historically has created value through development. That's something that we feel like we're really, really good at, and so after the pandemic, you know, we were going to do the same thing that we did back in 2010, 11, 12. We thought, okay, let's go get a bunch of deals done. Construction costs going to go down. Didn't materialize because of something called inflation. And even though the demand may have softened, material costs, labor costs, all those items went up. And so absolutely, Azim was just saying that Hampton Inn that you developed in 16 or 17 is double now, right, today. But here's the good news. We are seeing that construction costs are tapering. So there's a little bit more clarity now than it was 2-3 years ago when it was growing at 10, 12, 15% a year. It was almost impossible to figure out what this thing is going to cost us. We have a much better idea today of what it's going to cost with the construction cost. And you have to have that conviction that, again, what is it going to look like a year and a half, 2 years from now? And I strongly believe that, and you heard Mitch say this earlier, even with this tremendous noise, if you designed a set of policies that would be detrimental for our industry, I don't think you could have done a better job, right? I mean, it's just amazing of all that noise that our industry has still had in many ways positive gain in RevPAR. And I could just imagine if that noise wasn't there. And I really believe that, I know we could talk about so many other things here, Teague, but I really believe that, there's an election year. So the midterm elections are coming in fall, and 28, another big election year. People vote with their wallets, and they tend to forget. And so I think that these are self-inflicted wounds, right, that have been created. And hopefully there's going to be an opportunity, and I hope it's not too late, but to reverse some of those policy decisions, or at least create some more stability. So, and then you heard about demand and supply, right? If you believe that demand is going to continue to grow, we all know that supply historically last 30 years has averaged about 1.7, 1.8. And supply has been our nemesis, even though I know we're developers up here developing hotels. It's not the demand piece of it. It's been the supply piece of it at the 1.7, 1.8% clip, right, in the last 30 years. Well, it's going to be well under 1%. And I just read something that we are at the lowest number of hotel rooms under construction in terms of percentage of the total pipeline since 2011. And so contractors and subcontractors that were not calling us about 3-4 years ago, or even before the pandemic in 18-19, are calling us today. And so they're hungry, they're sharpening their pencils. So you got to believe in where it's going a couple of years from now. And as you know, newer is better. And we feel like that it poises really well for developers. But again, you've got to be very disciplined with brand, market, basis. There's people that could build a hotel for $250 a key. That same hotel, someone could build it for $210 a key, right? That's a big difference in how well you're going to be successful. Just like at operations, development, there's a lot of levers you could pull as well.
And I'd add to that real quick is, Mitch and with T2, they actually officially shut down their development because in California, it makes less sense to develop. However, what they did do and the opportunities we're seeing for the folks who are developers at heart is the repositioning opportunities are like ridiculous. So to Mitch's point, if you can get in the right basis and take an asset and up-brand it or reposition it in some way, those opportunities we're seeing a lot of those and executing on them.
So in terms of development, what amazes me, so even when things were a lot easier, you know, we talked about when we built these Hampton Inns for $6 million, they'd be worth 10. Even at that time, I remember we would always get a contractor early on, you know, really figure out, you know, within a couple percentage points, what the hotel was going to cost to build. So we have the confidence moving forward. I do see sometimes people in the industry that are kind of maybe new to it, that come in and, you know, what they kind of go in reverse. They get married to the project without really knowing, you know, they'll buy the land, they'll get the franchise, and then they find out later on, oh wow, this thing is going to cost 30% more than what I thought it was going to build. And the economics don't make sense, and it adds a lot of stress to the process. So I'd say now more than ever, getting design build, design assist, knowing the risk that you have on the table up front is more important than ever.
We've done a mix of new construction and existing. I mean, new always wins because once it opens, there's a share shift. But I think the risk of existing is less because you have performance history there. The challenge with existing is the change in ownership PIPs. They're not easy anymore. So the execution is a lot harder. The loss of business during it, a lot more. The deferred maintenance, heavy. And then it takes, the supply chain issues are still there. And then I think once the renovation is done, it's another 12 months plus to get the business back. So there's a longer runway now for existing hotels and acquisitions. And with that, I don't think the sellers quite understand that. The buyers want them to understand that, and it creates this tension of where you land with pricing. Because as a buyer and having gone through it, it's like, oh my God, I mean, it's not the renovation is done and the next day the business is back. It's going to take another 12 months now from experience on getting that displaced business back.
It's called a bid-ask spread, Azim.
Yeah.
That happens.
Yeah.
Chime in, Bo. I'm going to pick on you. You guys were prolific buyers last year, so I want to get to this topic.
Yep.
What did you learn when going through that process that you could share with us? Like, how many deals did you look at, and what else did you
Yeah, so underwrote over 50 plus deals, ended up buying 6 out of the 50, right? And what we saw is there's quality assets there at or slightly above replacement costs. What we did also find out that in that kind of, call it sweet spot, the sellers weren't really sellers. Out of that, what we saw, let's just say 15 of them, it was only 1 that was closed upon. So I think folks that are sellers today are still struggling with, if I sell, what do I replace it with?
Yep.
Right, so that's something that we're not going to solve immediately. So, however, there was plenty of opportunities in terms of value add that was out there. The one big learning, kind of the underwriting was very conservative, just knowing these markets had already run up. So we didn't go in with high expectations for 26, to be honest. We started off great on those assets, but definitely went very conservative on the underwriting.
And who was your competition? Who else was looking to buy? Who did you have to compete
It
with?
was a very, very small pool of folks out there.
Right.
Very small pool. So we were kind of the supermodels out there.
It's exactly. No, it's exactly right. And I think your timing is going to prove well. Back to Wall Street real fast. They're inherently, our world, we're liaisons between Wall Street and Main Street, right? And Wall Street is very negative. So they have been net sellers over the last 2 years. They will be the biggest sellers this year, whether that's Blackstone and Starwood and Brookfield, or whether that's the public REITs. They fundamentally are net sellers. The REITs have been asset managers for the last 3 years. They've been renovating their hotels. They've been spending money, all collecting nice paychecks. Thank you very much. And now they're at what I will call capitulation, and they're now like, okay, we got to sell these because they're only getting older. They didn't work, what have you. And the buyers in my opinion, even though we're developers, are these guys right here on stage. This is who the buyers are today. That has been our last 3 years, and I think that's only going to continue in the future. And Mitch, back to my point, because you and I are positive, predicting RevPAR growth, and they're negative, thinking flat plus margin creep. So we don't want to do that. Agreed?
Yeah, and on that, Teague, sorry, just to add to that, like out of the purchases, it was really just 2 big boxes. The rest of them were all in the Hilton Garden Inn,
Yep.
kind of call it hotel class, right? So it was 1 big box with host, and to your point, extremely well taken care of from an MEP standpoint, but we also had the discipline of staying away from the big boxes.
I think I just think it resonates, and I'm going to say this, I'm going to close up and ask you guys for also like final thoughts. But you're hearing all this K economy. That's it, right? The K economy, the haves and the have-nots. All the big boys are leaning into ultra luxury because that guest apparently doesn't have a cap on what they're willing to spend for their vacation or travel. So they're all leaning into that, and now those assets are starting to come to market. You're seeing the Waldorf Astoria, you're seeing Chica Lodging in Key West, Waldorf in New York. You're seeing real big what is it, like a $3 million a key asset. Okay, because apparently that guest will come and spend. We are not in that world. I'm not a believer that, I get what they're saying, but I still love our world and where we're living, and I wouldn't change that.
We like to stay in that world.
Let's stay in that world. Stay disciplined. Wasn't that the word, Bo?
That's it.
Stay disciplined. All right, trying to wrap up. Final thoughts. What one piece of advice would you give these guys? Mitch's favorite question, or just thoughts?
Right, I would like to piggyback off what Mitch said, what I think I've heard from Warren Buffett, reading books and stuff. Treat other people's money in greater regard than your own is I think something that I think about all the time. And taking care of whatever you do, taking care of your assets, your people, in the long run, it's going to pay off.
Amen. Mitch?
Look, this is a cyclical business. Storms are going to come and go, and I've said this many times up here on a panel. You want a brick house or a straw house? Ask yourself that question. And so we want one of the best brick houses in the industry when that storm comes, so we can look for opportunities rather than fixing our own portfolio.
Bo?
You know, the operating playing field's becoming more and more even. If the purchase is based on you thinking you're going to operate better than the last guy, unless that individual's a first-time hotelier, don't kid yourself, that's not a business plan.
Calculated conviction. There's still opportunity out there. Be calculated, bet on yourself as an entrepreneur, bet on your team, bet on your culture, but have conviction and get stuff done.
You guys are incredible. Thank you, thank you, thank you. Let's go.